Well, investors are not the only ones that are waiting on pins and needles for the Fed's next rate move. Home buyers and sellers also are watching with a wary eye as mortgage rates climb and home prices cool off, leaving both owners and hopeful buyers feeling a bit of a pinch here. Let's bring in Marcus and Millichap CEO Hessam Nadji. It's great to have you on the show, sir.
Good afternoon. Great to be with you on the program.
So much to talk about. Obviously, the concern, you've got interest rates going up. The 30-year is now above 4.5%, and we're seeing kind of some pressure on home prices. Do you think that it's going to get much worse in 2019, or do you think we're going to see some stabilization in residential housing?
Well, first of all, the market is in really good shape. Both residential real estate and commercial real estate have not been overbuilt in this expansion. Lenders have been pretty disciplined, so they haven't overlend. There's not a bunch of bad loans about to affect the market. So the macro environment looks very promising and very well balanced between supply and demand. On the for sale housing front, what really hit the market was the consumer preference to rent. They wanted to have a lot more flexibility. They want to be able to chase jobs and move around the country. And like you said, the interest rate movement earlier in the year and price appreciation over the past couple of years really priced out a lot of consumers that would have normally bought homes but have chosen to stay in the rental market, both because of their lifestyle preference now and because of the lower affordability. Now, interest rates have come back in the last couple of months a bit, so that might help a little. But structurally, we're seeing a big preference toward rentals.
All right, well, let's talk about that, because if I'm seeing a lot of rentals out there, then I'm looking at commercial real estate as an investment, and you don't have to buy a building to be in that market. You could buy a REIT, you could buy all kinds of indexes that focus on commercial real estate. Is that the opposite story? Is that the good news story of 2019?
It really is, because commercial real estate, unlike most expansions, is not overbuilt, as I mentioned, and is not over-leveraged. Yeah. All of a sudden, it shines in a volatile stock market environment, in a questionable economic environment. Even with the economy slowing next year, we're creating plenty of jobs to create demand for office space, industrial warehouses, self-storage units, apartments, of course, and even shopping centers. So, and the yield on commercial real estate really stands out as a compelling alternative to a lot of investors. As you mentioned, a lot of private investors, high net worth individuals, are pooling their money, partnering with other friends and family, and buying, more and more commercial real estate.
Yeah, I was going to say, there's lots of ways to do that, that don't involve going out and buying your own building on your own to that point. And I love your predictions that we're showing on the screen here. You say that job growth is going to moderate. You like commercial real estate. And also you say that tax reform is going to come into play. How so? Because I thought that a lot of the tax reform bonuses were, at least on the corporate side, are kind of playing out already.
Well, they have from the standpoint of the effect on the economy. We saw corporate investments rise earlier in 2018. But for commercial real estate, the tax reform had a lot of favorable provisions. For example, the fact that pass-through entities, these partnerships I was talking about, are able to deduct the first 20% of their income before taxes apply. Accelerated appreciation, the continuation of the mortgage interest deduction, and a variety of other favorable provisions make commercial real estate even stronger in terms of total return in this market environment.
I like it. I like that idea, and I like the idea of the tax break as well. We all love that. Hessam Nadji, it's great to have you on the show, sir. Thank you.